have with me today CEO of Afgri, Chris Venter, to unpack those interim results. Good morning, Chris, and welcome.
Good morning, thank you.
Headline earnings per share was up 3.9%. Your fully diluted headline earnings per share remained constant for the 6 months.
Yes.
There is a bumper maize crop on the way.
Yes.
What can investors expect for the 6 months ahead?
Yeah, thank you very much. If you look at our earnings were up 23%. So we had some discontinued items last year, which obviously add back for headline earnings. If we look going forward for this year, we expect that to continue. We have actually, the crop is very important for us on the handling and storage business. So from a volume point of view, certainly we see the volumes coming through the business, and we expect that to go forward in the next 6 months.
Chris, and the theme for your year so far has been restructuring of your business. You've been streamlining, you've been disposing of non-core businesses. In your results report, you also said that there's further restructuring on the cards. What are you planning for the year ahead?
Yeah, what we've done is we've actually decided on a very clear strategy about 18 months ago to get back to our core business. So that's why you see a lot of restructuring going on. There's still a couple of companies that we have in the group that we see as not part of core business, and we will try to exit those businesses in the last 6 months. What we have said to the market last year, that we've dealt with the loss-making businesses in the group, and what we do now in terms of discontinued are more of the profitable business, but which is not part of core.
And which are those businesses that you are thinking of disposing of?
Yeah, we still sit with some business on the cash management, which was part initially of the retail stores that we're exiting or looking to exit. We still have a business in Australia, which we don't see as part of our core in terms of the region that we want to operate. So those two are the primary businesses that we will focus on now. We did the SENS announcement with regards to the chemical business that we exited, and also the branches falling outside our area. So we've done a lot, and I think we're getting to the end of that restructuring process.
And as part of the restructuring, you also obviously want to grow. Are you planning any acquisitions?
Yeah, what we did say to the market as well last year is that our growth, we see that in the foods area of our business. We start with the producer, we have the trading area, and then we have the processors on the other side. So we are focusing on the processing side to grow our business. We did look last year at the potential transaction with Sovereign Foods, which ultimately we didn't continue with. And that is the type or the area that we certainly will look at in terms of growth.
Are there any chances that those talks could reignite for Country Foods?
Yeah, for Sovereign.
Sovereign Foods.
At this stage, not really. Obviously, we will look at opportunities. We'll look at the numbers and see if they make sense. But at this stage, we have engaged with other discussions, which I wouldn't want to mention in terms of the detail. But obviously, we would like to see those. We've gone through a process of reassessing. And we said last year, let's take a step backwards after that transaction, and we are busy with engaging with other parties, and I think going forward we'll look at those.
Why did those transactions fall flat?
If you look at Sovereign specifically, there was, we engaged with them. Obviously, then later on, Countrybird came into the transaction with buying in a stake. We then said, if you look at the transaction, we didn't want to get one of the big three in the business as far as the volumes are concerned. It would have been too big a portion of our business in terms of the diversity in our portfolio. And as far as that is concerned, we said, let's rather take a step backwards and reassess the other opportunities in the market.
And your Afgri services, which contributes the most to your total revenue, within that is trading, and that is what you've used so far to expand into Africa. Are you planning any further expansion into Africa?
Yeah, what we've done with trading was we repositioned to focus primarily on the physical trade, in other words, to move product from the process to the mill or to the off-taker. And that is where we've seen some growth over the last 6 months, and even the earlier last 6 months of the previous financial year. So we will continue with that focus. We do export to most of the neighbouring countries as well as into the eastern side of Africa, and we'll continue to do that.
On everyone's mind today is Eskom and NERSA coming out with the official tariff hike today. What is this going to mean for your business?
It will have a major impact on our electricity bill. Obviously, we see that we have done the numbers just in terms of the 3 years forward, and it's high percentages in terms of growth. Ultimately, some of that will go through to the end user if you just look at the broiler business and the animal feed side. So yes, it will have serious impact. I think we would have to find a balance on terms of how can we take that portion on our side and portion give through on the price. Obviously, it's a competitive issue, so you can't just put it through onto the end price, but it will have a serious impact.